Bitcoin's role in global finance is shifting fast, and Lyn Alden is breaking down what could be one of the biggest game changers yet. Could the US Treasury be preparing to load up on Bitcoin? And if so, how would they do it? In this video, we dive into the mechanisms behind strategic reserves, monetary policy, and why Trump's Bitcoin incentives could reshape everything. Lyn explains the hidden levers the government can pull and what this means for Bitcoin's future. If you're serious about understanding where the financial system is headed, this is a must-watch. Hit that subscribe button and stay ahead of the curve.
Trump's incentives are 1, load up personally on Bitcoin, then 2, load up the country on Bitcoin, enriching himself in the process. His recent moves are step 1. What comes next is step 2. I mean, that makes a hell of a lot of sense if you were to follow the money and the incentives.
Yeah, I think that makes sense. I think that's a pretty plausible interpretation of this. It's hard to know how bullish Trump is on Bitcoin apart from near-term timing. Like if because like people speculate to what extent is he going to go to bat for a strategic Bitcoin reserve? He presumably knows more. Like it's possible he doesn't know yet. Like it's something he hasn't fully decided, but it's also possible that he is fully aware of his timeline and magnitude of what he expects to do there. And so he would have kind of mentally his own insider information. And in Bitcoin's case, it's not a security. And so you can own it and then pump it basically. And so that's probably a reasonable interpretation. I still think I have some skepticism around how big the U.S. strategic Bitcoin reserve is going to be. It could certainly surprise to the upside, but I generally take the under on assumptions. Maybe it's just because I kind of tend to be conservative in that sense. So they could, for example, the low hanging fruit is they just ring fence the Bitcoin they already have, or at least the Bitcoin that they don't kind of owe to others. And then say, well, that's, we're not going to sell it anymore. That's part of a reserve. And then further up the scope is to say, no, we're actually going to print money to buy it, essentially. And we're going to do it at scale. We're going to acquire more Bitcoin than we already have. And if he knows that they're going to err toward the upside there, it would make sense that he'd want to own Bitcoin at some scale before they do that.
And here's the question that's always been on my mind. How would they approach printing money to buy Bitcoin?
So there's different mechanisms. That's already how reserves mostly work, which is to say that if a country wants to accumulate reserves, they essentially can print their own currency and then buy foreign assets with it, like things that they can't print. And then later, if they want to backstop their currency, they can sell assets they've accumulated and buy back some of their own currency to kind of put a floor under it if it's having trouble. The U.S. has some mechanisms. The one that's kind of the most interesting and wonkish is the Treasury General Account and gold revaluation. So there's actually a clause in the Fed handbook where they can simply restate the value of the gold that they have because they currently book the gold at like $42 an ounce or something, based on the historical price it was at the time. And they could always say, well, now we're just going to rebook it at the current market price. And so they would get hundreds of billions of dollars in their cash account for doing that, which they can then spend. It's one of the few mechanisms they have to spend without issuing debt. And they could technically book the price higher than the current price. And so there's kind of mechanisms there where you could essentially create money out of thin air and then use it to buy assets. In this case, it'd be Bitcoin. And so they can use that for like some countries that are running big current account surpluses that don't want their currency to strengthen too much will instead acquire a lot of reserves. So they're purposely kind of creating more of their currency and then acquiring reserves. And you could have a similar case in the U.S. The U.S. right now, if you look at reserves as a percentage of GDP among most countries in the world, the U.S. is actually right near the bottom of that because we are the axiom of the system. So we only have like say 2% of our GDP in reserves or some small number like that, and it's almost all consists of gold. Assuming it's there, it's not actually like auditable in the same way that Bitcoin can be with proof of reserves. But assuming, every ounce of gold that is said to be there is there, along with very tiny amounts of actual foreign exchange reserves, the US has like 2% GDP reserves, whereas most developed countries have, say, 5 to 10%. And some emerging markets will go up much higher than that because emerging markets are historically the ones that need reserves to backstop their currency. And the US, if they chose to, they could, boost their reserves to 5 or 10% of GDP and be in line with other developed countries. That'd be a massive number. And they could put it in foreign assets, they could put it in gold, or most relevant for this conversation, they could put it in Bitcoin.
Would he? Does he have that button, or does that get deferred to the Federal Reserve? Who has the final push?
I believe the Treasury has the that specific mechanism of revaluing gold to fill the Treasury general account. I believe that is initiated by the Treasury, which is under the executive branch. If I, remember my reading of the Fed handbook, I think that's
Mm.
where that's directed from, and I don't think that has to go through Congress. I think that's a Treasury action. There are other bigger things like the Lummis bill that go through Congress.
That's wild. Because I mean, one of the other mechanisms would be to sell government bonds to the Federal Reserve and then use that money to go and stack Bitcoin. But I just can't see that happening. I just don't think the Fed they wouldn't allow that, surely.
I think that especially, yeah, so the Fed would generally buy bonds if there's a problem in the Treasury market, like if the market becomes illiquid. Um, and they can point to say, okay, we're doing this for plumbing reasons. They can kind of get over why they're doing it. Like in 2019, um, they basically had to stop quantitative tightening and go to quantitative easing. And they never really had a good narrative as why. It's basically because there's a T-bill oversupply problem. Um, but it wasn't so blatant as a government issuing a ton of bonds to buy something. Um, with the Treasury mechanism, some people even pointed to that during, like, say, prior debt ceiling disputes. That if a president, is Congress is kind of holding them with the debt ceiling, and the cash is running out, they have these kind of wonkish mechanisms. Like people talked about minting a platinum coin, and the reason it was platinum is because it's the one metal where, like, the legislation that allows that capability doesn't specify um, what nominal figure can be on the coin. So you can technically make a platinum coin of any nominal dollar figure. Um, but probably the clearer way is this TGA method of just revaluation. Um, and as far as I can tell, the Fed can't really push back on that, but they can push back on, hey, we're going to issue tons of extra bonds, and you have to buy them. There is still some degree of government central bank independence, up to a point.